2020, the year of the time machine. We got some fascinating statistics on some of the ways in which our behavior as human beings, our behavior as consumers have changed dramatically. Obviously, you and I both know just how big of a change the pandemic was in terms of adjusting habits, but we got some stats to back it up that will hopefully you'll find interesting, along with the fact that we'll be talking about 2021, not quite time for our fearless forecast. We're going to do that next week, so stay tuned for that. That's a little tongue-in-cheek exercise we do every year at the beginning of the year. We'll tell you how we did for 2020, along with looking ahead to 2021. On this week's program, though, we're going to talk about some of the Social Security changes for the year 2021. So welcome to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're Central Florida's longest running radio program, coming to you on the News Radio WFLA Orlando network, along with 96.9 The Game. Also happen to be one of the top 25 financial planning podcasts on the World Wide Web, with over 14,000 downloads of our program at last count. So we appreciate all of our listeners on the various social media channels out there, whether it's iTunes, Spotify, YouTube, Facebook, whatever the case may be. We love our social subscribers. My name, of course, is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciary stands ready this week to help you change your life with a successful and cost-effective financial plan that produces superior investment results and provides you with peace of mind for the future. So we certainly hope everybody had a very Merry Christmas. The holiday season this year was certainly an odd one given the whole pandemic. I know on Wednesday of this past week, myself and my rest of my family sat in a long line at Bennett Park in Orange County and got our rapid test just to make sure that everybody was clear for the Christmas holiday. We were celebrating with my mother and my mother-in-law, who are both age 80 now, and then Bob, who is 92. So obviously you got some older folks that we were celebrating with, so I wanted to just take that extra precaution of getting a rapid test just to make sure that we were all clear. So we hope that in some form and fashion you were also able to enjoy the holidays. You know, what was unique about the holidays around the office this year, besides the whole pandemic thing, was that this was the first year that as an organization we had participated in a food drive for Second Harvest Food Bank and a toy drive for Toys for Tots. One of those things that we wanted to do this year, given how difficult the pandemic has been, particularly on lower income households. I don't think I'm saying anything that you probably don't already know, but this has definitely been a situation where the impact, or the economic impact of the pandemic has certainly been greater on lower income households where their jobs maybe don't have a laptop. And so we felt it was important to try and do something as an organization. So for the first year, and I think it's going to be one of those things that we're going to continue to do going forward, because the outpouring of support from our clients was just tremendous. If you had the opportunity to kind of come into the office in the days leading up to when our drives were sort of wrapping up, you'd find that the whole place was just filled with toys and food. Felt like I was back in an old Toys R Us, if you remember those big stores of all toys. So it was certainly really neat to see the outpouring of support from our clients. And so we wanted to take a moment and thank them for their contributions to both the toy drive for Toys for Tots and the food drive for Second Harvest Food Bank. We wound up donating nearly 2 tons. I mean, that's just an incredible amount. Nearly 2 tons of food went to Second Harvest, a total of 3,789 pounds to be exact, which translates to 3,158 meals for Central flirting. So really just amazing. So just wanted to take a moment here at the top of the show to really thank everybody who participated. You know, the days leading up to Christmas are usually a kind of a slower time, but lo and behold, the folks in Washington were actually at work, shockingly enough, and they got together and they passed, or at least Congress did, not quite signed by Trump as of Sunday morning, last check of the headlines, still not quite signed by Trump. We suspect that it's going to be signed simply because the bill that passed both houses of Congress was in fact a bit of a compromise solution, if you will, to responding to the continued impact of the COVID pandemic. So we wanted to spend some time just sort of hitting some of the highlights of what's in that bill and how that is going to affect you. So first and foremost, again, not signed yet. It's expected to be signed, but not signed yet. So next week we may be reshuffling a little bit of this. But I think the concepts that are in the bill that has certainly passed both houses of Congress today, that's waiting for that signature, will in fact be a part of what we'll see going forward in some type of a second round of stimulus in response to the COVID pandemic. So first and foremost, the bill that is still waiting that signature does in fact provide another stimulus check. If you remember back in April, May timeframe, the first round of this stimulus for the COVID pandemic had checks that were sent directly to people. It was $1,200 per adult, $500 for dependent, and if your income based upon your prior year, at that point they were looking at the 18 return. If your income on the 18 return as a single person was below $75,000, or as a married couple it was below $150,000, then you were eligible to get the full amount of the stimulus. This time around, it's $600 per adult, $600 per dependent. So they've bumped up the dependent amount and they've lowered the amount for the filers of the return. So look for that coming your way if you're below those income thresholds. The reality is that a lot of these stimulus checks, the first round and then the second round, you're going to ultimately sort of have to true up on the tax return. And this is where it gets kind of unique, is that if you're truing it up on a subsequent return, meaning you're reporting, okay, yes, I did get that money. If you did not get as much as you might have been eligible for, then you're going to get extra back when you file your tax return. Here's the unique thing of these stimulus checks, whether it's the one that is on the table for hopefully the next 2 or 3 weeks, or the one that you got back in April. If you got more than what you should have, you don't have to pay it back. So pretty unique in terms of the stimulus checks, but certainly expect another round of stimulus coming your way as a result of what's floating around in Washington these days. Similarly, there's an additional unemployment benefit, right? An increase or a federal unemployment assistance on top of the state amount that works out to be $300 per week through March the 14th. That's less than what it was last time around. It was $600 last time around. It's going to be $300 this time around. And then also in terms of unemployment, an expansion to 50 weeks versus the typical 26 weeks that you can claim. So those are the big parts. Another round of stimulus checks, an extension of the extra unemployment benefits to help people that are unemployed. There's a number of other things as well, which we're going to hit very quickly in the next segment, just so you can kind of see the themes that are floating around in Washington. So stay tuned with us through the break, and then we'll come back and we'll talk about some of the highlights of the COVID bill, the stimulus bill that is sitting in Washington these days. All that and more here on Dollars and Cents with Joel Garris of Nelson Financial Planning. We're talking today about the latest details of the COVID bill that is sitting in Washington, waiting for somebody's signature out of the White House. Right now, it's a $900 trillion. That's right, trillion. That's a big, big number The reality is that it's not as big as what it could have been and bigger than what it might have been. The reality is it's got a lot of provisions in it. So on the program, we're sort of unpacking some of those provisions in there. You've probably heard about the two biggest ones, which we talked about in the last segment. First and foremost is another round of stimulus checks, where it's like the $1,200 checks that folks got in May or April of this year. The reality is that it's not going to be $1,200, it's going to be $600. The good news is that the dependents are going to actually wind up getting a little bit more, $600 instead of $500. Still some income parameters that exist on that. If you're below $75,000 as a single, that makes you eligible. A married couple or a couple filing a joint return below $150,000, that also makes you eligible for those stimulus checks. On the unemployment side, it's an extension of benefits up to an additional $300 a week through March the 14th. A little bit of a federal add-on, not as much as it was last time when it was $600, but at least an extra $300 certainly helps if you are on unemployment. In terms of other things, there's a bunch of other things in the legislation that is pending in Washington these days, so we wanted to sort of unpack that. Welcome, of course, back to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're Central Florida's longest running radio program, coming to you here on the News Radio WFLA Orlando network, along with 96.9 The Game. We also happen to be one of the top 25 financial planning podcasts on the World Wide Web. So thank you for joining us today. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciaries stands ready this week to help you change your life with a successful and cost-effective financial plan that produces superior investment results and provides you with peace of mind for the future. So we've talked about the extra round of stimulus check. We talked about the extra money in unemployment. Similarly, in this new COVID bill, there is some rental assistance to tenants. It extends the eviction ban until January, to the end of January of the year 2021. As you might well expect in a COVID response bill, there's also some money for healthcare providers, schools, testing, tracing, vaccines, things like that. So a lot of money getting put towards prevention, testing, and continuation of the vaccines. In terms of business, there's also, of course, some business provisions in there. There's some specific aid to the airline industry, entertainment venues, places really that have sort of been hit by not being able to have large crowds of people. Movie theaters, live venues, there's some specific aid in there for those types of business categories. And then generally for all businesses, there is a second round of PPP money, which stands for the Payroll Protection Plan. That's the piece where it becomes as a loan, but it's a forgivable loan, assuming that you wind up using it to cover payroll and rent and some of the things that the folks in Congress limit the use of that money to. Here's the really big thing, though, on the PPP provisions that are in this next stimulus bill for COVID. And that is this resolution of this issue that we talked about a couple of weeks ago, whereby the IRS had taken the position that if you get a PPP loan and it's forgiven, then you can't deduct the expenses that were associated or covered by that money. The IRS had taken the position and had restated it as recently as probably about a month ago that said, hey, you're not going to be able to double deduct things. You're going to get a interest or a income-free, a tax-free loan with loan forgiveness, and then at the same point in time be able to write off the expenses as well. Well, the folks in Congress actually didn't like that interpretation by the IRS. So this new COVID bill does in fact have specific language in it that sort of overturns that IRS position. So if you got a PPP loan and it's gotten forgiven, then that is income that you don't have to report on your business return, and then the expenses that you used to use that money to cover those expenses, you're also going to be able to deduct. So the power of that loan sort of increases or doubles effectively as a result of the language that is in this latest COVID bill. So along with that, there's some streamlined forgiveness of $150,000. But this notion of clearing up the confusion or the position that the IRS was taking about not being able to sort of double up in terms of the benefit of the forgiveness of the PPP loan, now it appears that the folks in Congress have said, no, we intended that. That's something that we intended, and so we're going to now put it in writing. And it appears that it is in writing in this version of the bill that has passed both houses of Congress. Similarly, there was some changes in terms of charitable deductions. Now, this one sort of got buried along the way, but for the year 2020, you were able to deduct $300 as a charitable contribution without having to itemize. And this is interesting because I think this may be the way or the trend that you're going to see the folks in Washington go to, is giving people the opportunity to make charitable contributions without necessarily having to itemize. Well, they like the idea so much that they incorporated it into this plan and actually doubled it up for a joint return, whereby for the year 2021 you can now do $600 in terms of a charitable contribution and get a write-off on that on your taxes without having to itemize. And that's particularly important because with the increase in standard deduction, many folks find that they're not itemizing anymore. And instead of like a third of the population that was itemizing prior to the Trump tax cuts, now it's less than 7% that are itemizing. So the beauty of these charitable contributions are sort of regardless of these charitable contribution provisions, regardless of whether you're itemizing, you can still make the charitable contributions. And then of course, there's the one that I'm sure you've heard in the media, because this is, just catches people's attention, and that is the return of the 3 martini lunch. Now, I don't know about you, but it's been a long time since I've had 3 martinis, let alone at lunch when you're supposed to go back to work. I did sort of catch the end of that era as a young associate practicing law in DC. That was sort of the end of that era where you would go out to these long lunches and maybe have a cocktail. Unlikely that you get to 2, certainly you don't get to 3, but anyway. The reality is, though, that that's not really part of how business is done these days. The notion of sitting around and drinking 3 martinis at lunch isn't really anything that happens in today's world. So the interesting thing, though, is that they still use that sort of description. Well, it's particularly relevant in terms of the proposed legislation because, this is what they've done in this legislation is they've said that you now can write off 100% of business meals in an effort to sort of help out the restaurant industry, give people a full deduction on it. Here's the reality. It hasn't happened like since the 80s. You've only been, which is probably what maybe killed them, 3 martini lunch, along with everybody's liver, going away. Anyway, since the 80s, you've only been able to deduct 50% of that meal expense. So you always were able to deduct the meals, but only 50%. This legislation changes it back to 100%. Don't confuse that with entertainment. It used to be a 50% deduction for meals and entertainment. The Trump tax changes changed and eliminated the ability to deduct entertainment. So you were just left with being able to deduct meals, but only at 50%. That's how it's been since the 80s. For the next 2 years, 2021, 2022, the proposed legislation in Washington increases that to 100% on the meal side of things. I still don't recommend that you get 3 martinis at lunch because that's probably a really bad idea if you want to get anything done for the rest of the day. But the ability to write off 100% of meals as a business deduction. It appears that it's going to be back after a 40-year absence for the next 2 years. We'll see whether that one actually makes it through, but it's part of the current bill. So anyway, that's the latest out of Washington. Awaiting Trump's signature. We expect that to happen. This bill does represent sort of a bit of a compromise in terms of the number of dollars at that $900 billion level. It's still a big number that has a lot of different stuff in the bill that is intended to help people, particularly during this pandemic season that is upon us. Anyway, we're going to take a break, and then when we come back, we're going to talk about 2020 being the year of the time machine here on Dollars and Cents. 2020, the year of the time machine. You know, you've talked about it before on the program about how the year 2020, particularly with the pandemic, really accelerated a tremendous amount of trends. Some have described it as living 2030 or seeing 2030 in the year 2020. And certainly with those kinds of dramatic shifts, this push to technology, there's certainly some important investment themes to be thinking about as we move into the year 2021. So Wall Street Journal this past weekend had a lot of interesting statistics that we wanted to share with you on the program. So this segment is going to be sort of packed with some interesting information that hopefully will give you thought as to what the future might be, particularly in terms of these particular industries. So welcome back to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're Central Florida's longest running radio program, coming to you here on Sunday mornings on the News Radio WFLA Orlando network, along with 96.9 The Game. Go Bucks, good win for the Bucks yesterday. They're now officially back in the playoffs, so we appreciate our listeners over there on 96.9 The Game. We're also one of the World Wide Web's top 25 financial planning podcasts, so be sure and subscribe to us on your favorite social media channel of choice, whether that's YouTube or Spotify or iTunes, whatever the case may be. We are on it. If you have trouble finding us, just go to our website, nelsonfinancialplanning.com. You'll see a bunch of icons in the upper right-hand corner on the website. Click on the one that looks most familiar to you, and you'll get directly connected to our channel on that social media station. So my name is Joel Garris. I'm a certified financial planner, certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciary stands ready this week to help you change your life with a successful and cost-effective financial plan that produces superior investment results along with peace of mind for the future. So certainly the pandemic forced a lot of folks to get comfortable with this notion of online shopping. I don't think my mother has quite figured it out, but she's working on figuring out Shipt, which is good because then that means she doesn't have to go in at 80 to go into a grocery store. But she's working on it. But stop and think about that. And it is amazing. You know, somebody that grew up without really any form of technology. She's a retired school teacher, been retired now for 15, 20 years. That wasn't really part of the classroom or part of the workplace 20 years ago. And so the change that's sort of been forced on her along with everybody else is really tremendous when you stop and think about that and the need to sort of learn it and kind of learn it along the way. And so whether you look at online delivery or a host of other things, there really is just some unbelievable things that have happened that what's interesting is I think some of these things are going to be with us for a while. I mean, I'm sitting here at my home doing this radio program. The producer is sitting in the studio back in Maitland, and so we haven't done one of these shows in the studios since the pandemic started back in March. I've got a ton of equipment, my little kind of setup here at my house, and it's just unlikely that we'll probably wind up going back into the studio, because once you have all of the equipment and you're effectively able to do the show remotely without having to go in, it sort of eliminates the need to go in. Still can do a live show on a Sunday morning, and so that's what we are doing. But just one of the ways in which things have changed. Well, the Wall Street Journal this weekend had some fascinating stats that we wanted to share with you on this segment of the program in terms of how we live now versus how we live 12 months ago. So let's begin. Obviously, food delivery, right? Big change. If you hadn't gotten your food delivered, you probably did at some point over the course of the past 8 months. Food delivery doubled compared with 2019. May, of course, when peak shutdown, had the highest average at $36 per person. The highest jump year over year came in July with 160% growth in food delivery from the prior year. Alcohol, right? Restaurants closed. And so retail sales of alcohol increased dramatically. People started kind of becoming mixologists and mixing their own cocktails. Stay away from the 3 Martini lunch, as we talked about in the prior program, in the prior segment, and ultimately making cocktails and drinking from home. U.S. retail alcohol sales increased by 71% in April. Overall, alcohol sales increased on average by 58% compared with last year. So big changes in terms of alcohol. Some of that may subside, right? Because the reality is that as restaurants start to reopen, as bars start to reopen, you're going to go back. But the reality is maybe you've acquired some new skills on how to make a nice Cosmo or a dirty martini that at the end of the day, you now say, well, wait a minute, I'm not going to go and pay $15. Can make one and have my chilled glass and all that, and now I don't have to do that. So changes on the alcohol front. Similarly, streaming services, right? If you didn't have a streaming service like a Netflix or an Amazon Prime, chances are you probably signed up for one. Those numbers also increased dramatically. Average American now has 7 different video streaming services, up from 5 in April. Contrast that with what would happen with Ticketmaster and movie theaters. Ticketmaster had a drop of over 80%, and movie theaters had a 93% decline versus last year. That is an industry that I think is these changes are going to be permanent. We see these studios releasing simultaneously in movies and on their streaming networks. And you talk about eliminating the middleman that was the movie theater. Boy, this really has done that, whereby the theaters now control much more of the content and the distribution of that. We were watching the latest last night. My wife and I were watching the latest George Clooney movie on what was it? I think it was Netflix. Netflix, yeah, Midnight Sun. Good movie if you haven't seen it. Also, big changes on the travel side of things. The average spending on air travel, half of what it was last year. Okay, that makes sense. Overall spending at accommodations dropped by an average of 32%. Here's the interesting stat in this. If you go to spending at online travel agencies, it dropped by 52%, but those that did stay in hotels paid an average of about 30% more than 2019. So the interesting nugget there is, well, wait a minute, if there's perhaps less choice or less people traveling, those that are traveling are going to be paying at a higher price. A little bit of supply of, the law of economics and supply and demand at work in the travel industry. Day trading, we talked about that. The number of accounts that have, in prior episodes of the program, more than 3 million people set up accounts at Robinhood, which, by the way, if you read the headlines, is now being investigated by multiple states for not protecting consumers sufficiently enough. You really shouldn't turn your investments or your retirement into some kind of a game. That's not a good idea. Spending on brokerage apps amounted to more than $770 a month. Imagine if you just saved that money rather than spend it on the trading app. Anyway, home furnishings have certainly changed as well, as people were forced to set up offices or do school remotely. I remember talking with somebody whose child was going off to college here in the fall, and they were saying, we can't even find a printer. There's been such a demand for that. The average monthly spending per person on home furnishings rose by 43% during the course of the month of May. The category still is in an increase, 36% just in September over the course of where we were the prior year. Home fitness, right? Big changes there. No longer going to the gym. Maybe you getting your Peloton. Maybe you're getting your Nordic Track. The spending at fitness clubs dropped by 42%, but purchases of home fitness products like those stationary bikes rose by more than 100%. So once again, it's sort of showing that constructive, destructive process that exists in America today, whereby if you've got something that's different, something that's unique, something that has a big demand, then you may very well see those that are still in that old type of an approach wind up falling behind. A couple more and then we'll wrap it up. Face masks, right? I mean, who owned a face mask a year ago, right? Etsy reports that merchants on their platform sold some 24 million face masks during the September quarter, amounting to about 289 million. Gap said it made around 130 million during the second quarter in face mask sales. So a lot more face masks out there than there used to be. Similarly, arts and crafts, as people were staying at home, the holidays led to higher individual spending in arts and crafts category, an increase of 17% from prior year. So some interesting stats of just what happened during the course of the pandemic and how things have changed. Hopefully that gives you some food for thought as to what things may look like in the future. A lot of those changes are, in fact, here to stay. But we can't stay any longer because we got to go to a break. So we're going to break and then we'll come back and talk about some of the Social Security changes for the year 2021 here on Dollars and Cents with Joel Garris of Nelson Financial Planning. So a new year means that there's changes. Well, in this segment of the program, we're going to talk about some of the changes for Social Security for the year 2021. We're also planning on doing a blog post on this topic as well this coming week. So be sure and check out our website, Nelson Financial Planning, for the section that says From the Desk of Joel Garris. That's sort of where we put our blog posts. So we're going to do this segment of the program. We're going to kind of write it up and do it as a blog post as well. So welcome back to Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're Central Florida's longest running radio program, coming to you here on 96.9 The Game, along with News Radio WFLA Orlando. My name is Joel Garris. I'm a certified financial planner, certified financial fiduciary of Nelson Financial Planning, where our team of certified financial fiduciaries stands ready to help you change your life this week to become a successful and cost-effective financial plan that provides you with peace of mind for the future. So what's the latest on Social Security? Well, there's an increase in your cost of living, or there's an increase in your check, and so that means that there was in fact a cost of living adjustment. For the year 2021, it winds up being 1.3%. Effectively, 1.3% amounts to about $20 per month for most. The reality is that the most that you can get out of that 1.3, depending upon if you're getting the maximum value, is $137 for someone that is age 66. The maximum benefit then translates to $3,148. In order to get the maximum benefit, you pretty much have to have maxed out the Social Security earnings amount for many, many years, going back over the course of the past 35 years, which is what Social Security itself is added on or based upon. So if you're getting the maximum amount, that means you maximized out your Social Security earnings. Now, 1.3%, that is, as you might well imagine, much less than in years past. Remember, the COLA, or the cost of living adjustment for Social Security, is based upon the difference between the consumer price index for urban wage earners. I'm not sure why that's urban wage earners, but it is. That's the definition of the third quarter of the current year versus the third quarter of the prior year. So this year calculated out to be 1.3%. Not particularly exciting, since it's only amounts to about $20 in the average person's Social Security check. The good news, I guess, is that that's better than 2010, 2011, 2016, when in fact in those 3 years there was no adjustment whatsoever. One of the things that you always worry about in terms of these COLA increases on Social Security is, okay, well, that's all fine on Social Security. How much is my Medicare increasing? Well, we've got the numbers on that. Your Medicare Part B is going to be $148.50. That's an increase of $3.90 from $144.60 for the year 2020. So the good news is that the increase in Medicare will not take all of that increase in Social Security from the COLA. It'll just take a pretty healthy chunk. Anyway, the maximum earnings cap that you have, and remember what the maximum earnings cap for Social Security purposes is there is a limit in terms of the amount of wages that you can make that you are required to pay Social Security tax on. Now, that doesn't apply on the Medicare side of things, but for the Social Security, Medicare, Medicaid side of things, but for the Social Security side of things, there is a maximum earnings limitation, meaning once you go above that, you don't have to contribute anything more to Social Security. That is widely being debated in Washington as one of the areas of potential change to help shore up the Social Security system, but the reality is that it has not yet become law. So the reality is that the maximum earnings cap for Social Security increased from $137,700 for the year 2020, increases to $142,800 for the year 2021. If you're over that, then that means you don't have to pay the Social Security, still have to pay Medicare, Medicaid tax, but that's the maximum earnings amount that you have to pay on the Social Security. Contrast that with the earnings limitation on Social Security if you're below your full retirement age. Two very different concepts. The earnings limitation has to deal with if you're collecting Social Security before your full retirement age, then there's a certain amount of earnings that you have to stay below. Otherwise, you wind up giving back your Social Security $1 for every $2 that you're over the limit. Well, the earnings limitation increases a little bit every year. For the year 2021, it's projected it's going to come in at $18,960. So roughly about $19,000, which means that if you're doing a part-time job and collecting Social Security below your full retirement age, once you get to your full retirement age, then you don't have to worry about how much money you're making from an earnings perspective. And again, remember this, we're talking about earnings here. We're not talking about retirement income, rental income, dividend income, capital gain. It's only work earnings that can impact your Social Security if you're collecting your Social Security before your full retirement age. So the amount of earnings that you can make is up by about an extra close to $19,000. Similarly, your full retirement age also is changing. In the year, if you turn 62 in the year 2021, your full retirement age clicks up another couple of months to age 66 and 10 months for the full retirement age. We're going to wrap it up and get on out of here. Next week, it's January 3rd. It will be the end of 2020 and looking ahead to 2021, whereby we'll do our feelers forecast. So stay tuned for next week's program. We'll do that annual tongue-in-cheek exercise, what we do each and every year, and we'll see how we did for the year 2020. So stay tuned for next week's program as we do that here on Dollars and Cents with Joel Garris of Nelson Financial Planning.